Okay, this is a video for lesson 2.1, using T accounts. The learning objectives for this are show the relationship between the accounting equation and a T account, identify the debit and credit side, the increase and decrease side, and the balance side of various accounts. Restate and apply the two rules that are associated with the increase side of an account. Now, last chapter, the effects of the transactions were recorded in the accounting equation, and you see the accounting equation here at the top, assets equals liabilities plus owner's equity. Now, this procedure is not practical in actual accounting system. Just because of the number of accounts used by most businesses, recording the transactions in the accounting equation would be cumbersome. Therefore, we need a separate record is commonly used for each account. Now, the equation can be represented as a T account like it's shown here. So here we have assets equals liabilities plus owner's equity. We draw a straight line underneath the titles. At the equal sign, we draw a down line. There is our basic T account. Now, what we're going to get into is every asset is going to have its own T account, every liability, every owner's equity. Okay, and you see the equation is broken up into a left side that has assets and a right side that has the owner's equity and the liability accounts. Now remember, we talked about a record summarizing all the information affecting a single item in the accounting equation is known as the account. Now, an accounting device used to analyze a transaction is called a T account. Now, with that T account, we saw there's a left side and a right side. Debit means an amount recorded on the left side of an account. Credit means an amount recorded on the right side of an account. You've probably heard those terms used other ways. For this course, debit is left, credit is right. Now, with the T account, here's our accounting equation. We just saw this T account. Now, here's our left side. Remember, it's the debit side. Right side is the credit side. Now, assets are on the left side of the accounting equation. That increases on the left side or the debit side of the account because of where it's located on that accounting equation. Liabilities and owner's equity, or the capital account, is on the right side of the accounting equation. Now, because of that, the increase on the right side or credit side of the account. Then we have our normal balance. The side the account is increased on is the normal balance of the account. So it's the side that increases. Assets, because they're on the left side of the accounting equation, have normal debit balances. Liabilities, the owner's capital account, have normal credit balances. So here's kind of looking at overall. So here we have our assets. On the left side here, any asset. Debit's the left, credit's the right. Because it's on the left, the increases on the left, our normal balance is the left. Credit is the decrease. We move across the equal sign, we have any liability here. So because it's on the right, the credit side increases, the normal balance is the credit side. Any debit would decrease that liability. Same thing with the owner's capital account. It's on the right side, so the credit side increases. The normal balance is on the credit side. Debits decrease the account.